go to YouTube, go live on YouTube. Okay, we're live, and good morning and welcome to another episode of the Crypto Hour. Lots going on in the markets today, so I will waste no time and start sharing my screen straight away so that we understand what we are facing. Okay. So this is what we are seeing literally in the past 24 hours or so. Okay. I say Bitcoin has had a precipitous drop, started from the end of last week, dropping down from 23,000 to roughly 22, and then as you can see here, let me just make it a little bit bigger. As you can see here, we actually hang about for about a week until early hours of yesterday at about that level, and then we have another massive drop to now below 20,000. Now, and this is just talking about it from a technical point of view, and we'll see why all this has happened. Okay, but from a technical point of view, what's in store for Bitcoin and where could it go from here? Let me just go to slightly bigger time frame so I can get more in. Okay, yeah, there are some pockets of demand at this level here, about 19,000, between 19 and 20. As you can see, that the price is actually pausing at this level, but I'm not quite sure that this is strong enough to get it to cool down. So probably we'll just like break through this one. There's another small pocket of demand between just around 19,000, where price is probably more likely to to stop, at least for a considerable amount of time. Let me just increase it. Is either at this level here, which is around 19 to 18,800. As you can see, there was activity on the way up as the price was going up. So this is where kind of like buyers and sellers were in equilibrium for a little while. Okay, and at the same time, that's another. If we go through that level as well, then we're looking at kind of low 18s, high 17s level. And if we go in below that, then you don't want to think about it really, because we are dropping down a long way. We're going back to the levels. So this range here, that is going back to the doldrums of we had for several months. Going back to you can take that back to November. Okay, between around 16,000 roughly was the mid range, the mid price. That range we had a couple of episodes below and above, but really price was happy between 16 and 17 for several months, and then we broke on the upside. So as breaking on the upside, we had some. So these are the kind of, you can see busy times. So where they are, when price coming back to it might be hanging around that area again, and then if it finds some strength, then turn around and start going up. Or if there is increased momentum on the way down, we can carry on dropping through these levels as a knife through butter. Okay, so this is the happiest news of the day, by the way. Okay, so and let's have a very, very quick look at the economic news that we're expecting today. Today is an important day from the point of view of news releases. We've had a Japanese yen that confirmed they haven't increased the interest rate, although they keep facing increasing inflationary pressures. So at the moment, though, they still have a negative interest rate, and they're the only country that hasn't increased interest rates during this post-pandemic period. The other things, there are some mixed signals from the UK with a slightly higher GDP, but at the same time we have some negative numbers talking about industrial production, manufacturing production, which is turned negative. So these are the kind of the indicators that tell you how the economy is really doing. Construction output going down. So the driving forces of the economy are slowing down. You know, although people say, oh yeah, obviously you hear the politicians say, this is great, we turned the corner, our GDP is going up, but it's not really good news. Other things that we, other announcement, this is the big ball in the room, the non-farm employment change that will be announced at just before the market open in the US. The market opened at, you know, I'm in the UK, so it's 2:30 p.m., which is 9:30. Sorry, 9:30 a.m. in the US. This announcement will come at 8:30, so an hour before US time, an hour before the markets open. Okay, and it's definitely one announcement that that moves the markets every week, and it's difficult to understand how the markets would react to a positive or negative number that might be announced. So this is the expectation. Okay, 224,000. So we might come down with a stronger number to that, you know, which you think, oh, it might be good news for the economy. Okay, but from the point of view, so if you click here on this, you know, it tell you, you know, actual greater than forecast is good for the currency. Okay, but why is that? It's not necessarily the case. It can be seen either way. And trying to guess how the markets will react to a particular announcement, even after this has been announced, it's a gamble, because markets can turn one way or the other following either a good or a bad report. Okay, so generally speaking, if you know what I tend to say, stay away from the markets doing these. That's half an hour before and half an hour after this announcement. And if you already are in positions like short-term positions, be very control this position very carefully, because in my experience, very strong swings during that time. Okay, now going back to the what's going on in the market. The other thing that to consider, this is the XLF, which is the financial sector fund. Okay, which is basically an ETF of all the major banking stocks in the US. And as you can see, as we saw, similarly to what we saw in Bitcoin, well, we are not there. Oh, I've frozen. Right, I think I have run out of power. You got to give me a second. Just I have to probably. My mouse has just died on me for some reason. We just turn it off and on again. Otherwise, I'll have to get a.
Good morning, Luca.
Hi, good morning. Connection lost.
Nice.
Luca,
this is the second time I've seen your mouse run out of batteries. I've never seen this happen to anybody once. You twice.
I don't know. No, it wasn't. This is not. No, it doesn't run out of battery. Actually, for some reason, it froze. It froze, but it's back on again. Okay. So this is the financial sector, and as you can see, this is quite a drastic drop for an ETF in only 3 days. Okay, and in particular yesterday, talking about a 7% or a 7.5% drop in 3 days, which is very large. As you can see, this is pretty much equivalent to basically all the 2023 growth. Okay, we're going from 33 to 37, and now we're going from 36 to 33 again in only 3 days. So what it is due to is the problems in the banking sector with two banks. They are closely connected with crypto and technology firms. Okay, but it's funny thing is because you can see these are kind of like emotional reactions of the market, but are they actually justified in shorting and selling off all the banking sector simply because there's a problem with one or two banks? And you can try kind of understand yourself. This is a site called barchart.com, and what you can do, if you type generally XLF, which is, you can see, S&P 500 financial sector fund, and then you scroll down here on the left, you can see it talks about the constituents. So these are all the banks that are part, bank and insurance company, whatever, they are part of this ETF. So as you can see, the top two members, let's say, in terms of percentage of composition of the ETFs, are Berkshire Hathaway and JP Morgan. Now, both of the top two, like they formed more than 25% of the fund, have got pretty much nothing to do with crypto at all. Okay, and so you can see that and you can pick up some of these things, some of the components of this, and literally you can go and find out, okay, what is the involvement with crypto. So what I'm saying to you is that sometimes the market don't always react in a logical way, and react in an emotional way. And we can see that as well if you checked on the if we look at the volatility index, for example. This is the VIX. So can you see something here? So this is kind of the volatility of the S&P 500. Okay, and you can see, obviously, when the market is in trouble, people look for a hedge, against possible drops. So they tend to buy the volatility index. So far, and when the market is calm, maybe I can show you in a daily chart. Okay, when the market is calm, as you can see, volatility is low. And when there are problems, like here, for example, in 2020, in March, can you see the spike in volatility in the market? So traditionally is always, the mantra is, buy when volatility is high because the market is in sell-off mode, and then get out of the market when the volatility is low because people are getting like overconfident in the market, and then they start doing things that they are not financially sound, and maybe it's the time to get out of the market. That's the traditional thing. Not many people use this nowadays for investment decisions, but still, it's important to see the spike in volatility that's been caused by mainly Silvergate Bank and the Silicon Valley Bank. Okay, now this is the effect of this on crypto. Crypto traders suffer, hundreds of millions of losses in liquidations following the problems and this market crash. And obviously, as we see in the chart, what happens when the market is in sell-off mode, the stop losses become sell orders, and so they increase the speed of the movement on the downside. So where you see more speed, like here, is because there were kind of like stop losses below these points. Like here, people would have seen, this range, and would have put some. These are people that were going long on Bitcoin, would have put stop losses below this point. So what happens here? As the market goes down below this point, you can see that it accelerates fast. Okay, and so this is why you see this really long candles. Okay, things that moving quickly. Here this is 1 hour, for example. So the market moved, price of Bitcoin moved almost 5% in an hour. Okay, which is huge. I can't tell you how big it is. For a normal security to lose 5% in an hour is really big. So what happened? This is the big problem. There have been Silvergate Bank. Now, what Silvergate is a fully FDIC insured bank. Okay, but the problem is that its customers were a lot of cryptocurrency firms. So like Coinbase, FTX. In a way, Silvergate was almost like a central bank for the crypto industry. Okay, because it didn't do anything that shouldn't have been done by a normal bank. Simply, they had a lot of involvement with these kind of customers, and unfortunately, they have suffered as a result of the FTX bankruptcy, and as normal banks do, they only hold a small percentage of funds in reserve, because we are in a fractional banking world, and so generally speaking, banks hold no more than 10% of customer deposits in liquid assets. So if any of you, if you went to your bank, it doesn't matter what bank it is, okay, any bank, and everybody went to the same time to withdraw their money, there wouldn't be enough money there for everybody, okay, because that's the way the system works. Now, with the Silvergate, obviously, the depositors' money are protected up to a certain level, because the insurance, I think, protects up to $250,000. So they are insured from that point of view, but they had at one point more than $13 billion of deposits, and now everybody's taking the money out. Everybody is telling everybody else to get their funds out. So they have started voluntarily liquidating their assets. Okay, so Silvergate basically will be no more. Okay, and then there's another bank that's in trouble, which is Silicon Valley Bank. Okay, now Silicon Valley Bank is not so much connected with crypto, but is a bank that finances a lot of the technology companies, the new technology companies in Silicon Valley. Okay, so that is a different sort of problems. Obviously, some of the Silicon Valley companies are also connected with blockchain technology, and some of them in crypto, but generally speaking, is a technology bank that finances technology customers and projects. So and that's the reason these two banks going down. When these are traditional banks, by the way, they're not crypto projects. Okay, they're traditional banks, and it's quite funny because, as usual, if it was a normal bank going down, the politician will think, okay, let's the Fed deal with that and provide the assistance they need. Let's not get involved. But being disconnected, in connection with crypto, then we have lots of politicians jumping in and trying to make political points and score political points as a result of it. So what's happening? You get lots of people saying, you see, I've told you that crypto was bad. Okay, so we need to do this. We need to regulate this. We need to regulate that. We need to, control these bad actors. To the point, I was telling you before, I mentioned that Custodia Bank. You remember Custodia Bank, which is a type of bank that was launched, I think, a couple of years ago. There is more than 100% collateralized and liquid at all time. Okay, and they were refused FDIC insurance. Funny enough, FDIC registration for no particular reason, simply because their customers are crypto projects. But they could never be a run on a bank like Custodia Bank, because they have more than enough money to pay all their depositors out. Okay, this is funny because this has been the kind of like announcements. This is Caitlin Long. Oh, sorry. This is Caitlin Long, which is the CEO of Custodia Bank, and she's, there were a few tweets, talking about, there have been talks of giving emergency liquidity lifelines, to Silicon Valley Bank. And then she's saying, basically, well, sovereign companies don't need emergency liquidity lifelines. And bailouts, this was bailout for the crypto industry, was called for in November last year, before all these problems, but nobody worried about that because obviously it was crypto. But now that we are affecting the banking sector, you see how the protective arms are coming to it and trying to solve the problem from a regulatory point of view now. This is another CEO, another DeFi project, for example, is saying that because of all the overbearing attention from the US now, a lot of projects now are moving, of DeFi project now are moving offshore because of the US regulatory severity. But it's not just that, but also because they cannot tell you how to do something right. Okay, they don't provide any clear guidelines. It just come down as a ton of bricks on projects simply doing it wrong. But if you ask them, okay, how do I do it right? They can't tell you, which is an interesting catch-22 situation. So coming that, this is another article which is quite interesting. This is again the BitGo CEO saying that the investors might have avoided the FTX collapse if the SEC had addressed Bitcoin ETFs. So if they're given a way for normal people to invest in crypto, so what's it called, an inroad,
get away from there
to crypto that is fully regulated, then there wouldn't have been any need to go to Binance, to go to FTX or other players that were not fully regulated, because they're not banks. Okay, they're a new type of company that is basically emerging because there is a need and they are serving that need. So if you gave people a way of looking after their own need in that thing, then and I think it's right. I think FTX would have still collapsed, but the effect on the general market would have been smaller because people would have had other ways of dealing with things instead of relying on centralized players that are like FTX that are not doing things in the right way. Now, are they kind of like let me think. Wait a second. No, okay. I thought I had something else. So, are they good news so far? Today is kind of like a very cheerful day. Okay, the Biden administration proposed a 30% crypto mining tax. Okay, and closing wash trading loopholes. Let me explain to you what this. First of all, we're talking about the same rubbish. Okay, saying that the Bitcoin mining uses a lot of energy, and so they need to tax that. So they are proposing to put a tax of 30% of their energy usage. Okay, so whatever energy they use, they be taxed 30% on it. So this is the proposal, by the way. So it's not law, but they are proposing to do this, and in 10% annual stages. So the first year will be 10%, the second year 20%, third year 30%, starting from the end of this year. This is an interesting thing. So we'll see if it passes. If it passes the Congress, probably unlikely to do that. But if it does, what would that mean? That would be a scramble from now until the end of 2023 to move a lot of mining operations from the US to other countries. Okay, Bitcoin will not stop, and companies will not get out of the business of mining Bitcoin simply because something like this is introduced. The one thing that is guaranteed is that the US will not have a Bitcoin mining industry anymore. It will just like disappear somewhere else. Okay. The other thing that we are talking about is the proposing to close a loophole, which is called like the wash sale rules. This is basically if you have a loss in an asset, so people that sell the asset before the end of the tax year, so they can harvest a tax deduction, because they can then say, well, I made a loss on this asset, so I'll deduct it from my taxes, and then buy it back basically a couple of days later in the new financial year. Okay, if with securities like stocks and bonds, you can't do that for 30 days. Okay, so they are applying the same rules. They are planning at least to apply the same rules to crypto as they do to, stocks and bonds. So that's another thing that goes for crypto. So you're talking about people that are taking huge risks, because investing in crypto projects, in most cases, are early stage investing projects. So you're taking a lot of risk, and they're taking away a lot of the advantages of investing in this sector. And the other thing to consider is with Silvergate, and in a smaller way from the Silicon Valley Bank, what's happening is that they are taking away the layer that was providing the onboarding of people onto crypto. So obviously, to have crypto, you need to buy with something. So you need to start with cash somewhere, and cash generally goes through the banking system. Then with that, you go and buy Bitcoin, and you buy whatever other crypto you want. So they are started the fight against this layer. So thinking, well, if we can't destroy crypto directly, then we'll cut their legs by stopping their access to the world financial system. Okay, so all these initiatives that you are seeing are all part of this kind of like target to diminish the crypto sector. Okay, and I think what happened with both FTX and Silvergate, it's undermining the trust in the asset class, in crypto in general, because the people that are in crypto, people that have Bitcoin, had it for years, they're not going to sell it because they mentally decided that is the future. But all the other people that are not involved in crypto yet are affected by all this what I call it noise, FUD, fear, uncertainty, and doubt. Okay, and you only invest in something where you trust it and you think that it is going to do well. If you're uncertain about that, then we'll stop you from getting involved. Okay, and this is the thing. So these problems are probably pushed the growth of the blockchain and crypto sector back by a fair amount of months, I would say, if not years. So I've been telling you for a while, is not time to put all your eggs in Bitcoin yet, because we are due for a correction. I wasn't expecting this to happen, but still the drop was expected. Wasn't anything new. But this concerted effort by authorities to fight crypto every way they can is worrying, is concerning. And what was the article that I read? Oh, this is interesting. That's the one, and this is quite funny. Okay, so this is an article that says the Fed is to create a new crypto team amid concerns about unregulated stablecoins. Okay, and if you go down, so the thinking of the benefits of innovation can only be realized if appropriate guardrails are in place. Okay, so the innovation comes quickly, but it takes time for consumers to become aware that they could both gain and lose money on new financial products. Now, the interesting thing is that you're saying that compared to that, where is this? So he was saying that, so basically saying when compared to that, because the banking sector has protections built in, etc., etc. But it's funny. This is the CEO that was talking about custodial bank. She's saying, so all the sector that is regulated is safer than crypto. So she's pointed out the irony in these comments, given the Silvergate collapsed due to liquidity issue arising from a bank run, and they're saying, well, wasn't the Fed Silvergate's regulator? So what you're saying here, the banks we regulate in contrast are well protected from bank runs through a robust array of supervisory requirements. Well, what happened with Silvergate Bank? What's happening with Silicon Valley Bank? So these are Fed overseen banks, and it's funny that they are going against custodial bank that is more than 100% collateralized. Okay, so and so this is the current issue also the facing Silicon Valley Bank. The shares plummeted after a financial update disclosed that it sold 21 billion worth of its holdings at a loss of 1.8 billion because they couldn't raise the capital that they needed to plug the gap. So so this is the thing. This is the reminder. They're saying while this panic was happening, this is the Fed's vice chairman was giving this speech. They're saying the banks we regulate are well protected from bank runs, etc., etc. And this is, as I said to you before, in a fractional banking system where banks are required to hold about 10% of your money. So if you deposit money in the bank, they then use your funds to to lend it out basically another 10 times. Okay, so yeah, basically the money is not there to take it out of the bank when you want it, if enough people want to withdraw it at the same time. So other news, I talked to you last week about the Binance US buying Voyager, and the SEC opposed the the sale from the bankruptcy court to Binance US. Now the judge that's overseeing the bankruptcy proceedings, after 4 years of debating, has actually approved the sale. Okay, and now the Department of Justice. This is how messed up this can be. The Department of Justice filed an appeal on Thursday evening challenging the decision to allow the acquisition to go ahead. Okay, so basically the bankruptcy court, deemed that the SEC hadn't made the case to stop this. So they have to, they can't just say, well, we oppose this, so stop it. They have to provide a case for that to happen, and they didn't. The Security and Exchange Commission just didn't do that. So you say, well, sorry, but if you can't provide, if you can't argue your case properly, then I'm just going ahead and do what I thought I would do anyway. So, and I remind you that under this plan, under this sale, if you can see down here, Voyager's customers will see an estimated 73% recovery. Okay, so, and this plan, this plan was after the FTX proposed to buy Voyager and was approved as Voyager, by the buyer of the assets. But then FTX collapsed, and so Binance then stepped in and made the offer. The offer to buy customers' assets. So it would be a good result for everybody that had funds in Voyager, because I'll tell you what, when there is a bankruptcy, you are very unlikely to see 73% of your assets recovery. Normally we're talking about cents in the dollar. So you're lucky if you get 10%, 11% of your funds on a general bankruptcy. So the fact that the SEC is opposing this, it means that they're not really working for the people, for Voyager's customers. They are just basically fighting Binance tooth and nail in any way they can. Other good news. Let's see. So we're talking about the Fed's themes. Oh, this is another bit of good news as well. So we're all cheerful today. So KuCoin is the latest one to be sued by for sale of unregistered securities in New York. So, and in this filing, the interesting thing about this filing is that it mentions Ethereum as a security. So where before other legislation has said that Bitcoin and Ethereum were commodities and not Ethereum, here the lawsuit also categorized Ethereum as an unregistered security. Okay, so it says users could buy and sell popular virtual currencies, including Ethereum, Luna, Terra USD, securities, and commodities. And so this is one of the first times a regulator is claiming in court the ETA Ethereum is a security. Okay, so it's apart from the the KuCoin issue, this is kind of concerning again because it could create a legal precedent. And again, we're talking. It shows you the attitude of the U.S. authorities. They're almost like trying to introduce legislation by filing lawsuits. Okay, so this is a job really of Congress and the Senate to come out with legislation for anything. Okay, there is no legislation in place for crypto, so they are trying to shoehorn the security legislation to control the crypto industry. So, I mean, I can see personally like overreaching the mandate, but at the same time, it's been, the legislators have been kind of complicit in a way because they've been slow in producing any legislation that could be applied to this kind of new and really fast-growing technology sector. So we're talking about, I know it's tiny compared to other sectors, but $1 trillion is quite kind of like a sizable market, and I think we got to a stage now where all the main players are crying out for decent legislation to be passed. Okay, because everybody wants to say, look, we're fed up of being told all the time that we're doing things wrong. Tell us what the rules are that we should follow, and we'll follow them.
Yeah, Luca. Yeah, just when I was in the States in December, like former people that were running the Fed and some of the security guys, they're out there like on Fox News and other stuff, sort of bad mouthing and saying how bad crypto is and da 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 da. So they're putting the poison out there, and by using the title of being a former somebody in the Fed or one of the other or SEC, they're trying to like you say, they're doing things by stealth, but trying to poison the whole market in general. Because my dad had the news on all the time, but there's always something every day about the crypto markets and stuff, and this is the general sentiment. So it is kind of the sentiment that's being put out there regularly.
Yeah, but it's not. This has been going on for months. Absolutely. And it's funny that Gary Gensler is actually used to run a class on blockchain technology at the MIT. So it's funny that he's gone kind of like he's crossed from being a proponent of the technology, is crossed the road the other way. Obviously, he must have been paid very well for taking that step. Not saying by whom, but if you can think of how much money is being made by the financial sector in the US, that means that money. I'm not saying just talking about money, but money equates power. Okay, so it's something that is threatening their power, the power base, and they are fighting it because obviously they don't want to lose the goose by the with the golden eggs. So you can't believe how much is basically raked in on a daily basis by the financial sector simply by having this system in place. I mean, the forex market is over $5 trillion a day. It's huge, and really, when you strictly speaking, we don't really need to have 200 currencies in the world. One will do. Literally speaking, in the past, when things were going really well, and we're talking about in history, look back at the the Roman Empire, look at the the Renaissance, when the Florent actually made trade possible in the whole of Europe, and things like boom for a period of time. The same time during the Industrial Revolution, when currencies were backed by gold, we had a period of well-being where everybody's standards of living improved. Not just people who had money, but even the lowest paid in society, everybody's standards of life improved. What we are seeing instead, since the introduction of the fiat currencies, so when we dropped off the gold standard in 1971, we are seeing the gap between rich and poor increase. Okay, so strictly speaking, in the last 50 years, there has been like a 50% shift between the highest paid sector of society, so the highest 1% of society, and the lowest 10% of the population in terms of earning. So the richer people earn more than they did in 1971, and the poor people earn less than they did in 1971 in comparison. Okay, so it's kind of like a stark thing to see and to get your head around. Maybe next time we look at a few a few charts of things that are priced in gold, so that you can understand what the real value is of things today compared to a while ago. This is just to make you understand another thing that is caused by, and this is where the governments are really interested in keeping this system going, because how many of you have bought a property, maybe the house that you live in 20, 30 years ago, for a sum of money, and now that property is worth maybe 15, 20 times the price of what you paid for that property. Now, is that because the property is worth more, or is it because everything else is worth less? So that's the thing. The money that you use to buy the property is obviously depreciated a lot, and that's the increase in property value. But remember that you pay your taxes on nominal value. Okay, so we find, especially here in the UK, probably many other countries in the world, where people that bought just a normal family home, now they are considered millionaires, and their tax burden has increased because the value of the property has boomed in currency money. But if you think about what you could buy with the amount of money that you used to buy the property 30 years ago, and what you can buy with the value of your property today in terms of physical assets, so food that you can buy, cars and everything, is very comparable. There won't be much difference, but you are paying more tax on it because the nominal value is higher. So obviously, the old currency, fiat currency system was first of all thought of simply because governments wanted to spend without having to ask you first. Okay, and it's something that in a gold backed system, they couldn't do, because if they wanted to spend some money, they had to have it in their coffers first, or borrow against the holdings. But in a fiat currency system, if they want to spend some money, they just create it. So really, when you think about it, fiat in Latin means let it be done. Let it be. So let it exist out of thin air. And this is the world that we are living in. And maybe people think that we are still, are we in a bear market or not? We have been in a bear market for years now, in terms of the real value of assets. This is a topic for another day. Other bits of good news, and that's the last one that we talk about today. Hedera blockchain, another hack. So they have stopped the wallet and app access due to an exploit. And guys, this is where this is a very, very strongly backed project. Okay, so I don't particularly like Hedera Hashgraph because it's got the big boys behind it, so the Google of this world, so to speak. Okay, but still, you can't just launch projects from nowhere, and you ought to do a lot of work in the beginning, and then results is not encountering these problems later, or you have to deal it as and when these faults are discovered. Okay, and so at the end of the day, nobody can avoid doing the work. Okay, so we all have to do it at some stage. You know, there are projects that do it first and sell later, like, you know, Cardano, Algorand, Ergo, and so forth. And there are projects instead that sell first and build later. You know, just one to mention for all is Solana, for example. Okay, and they all have to, at the end of the day, build the technology to offer the services that they say they will offer their users. Okay, and what I wanted to, the reason why I'm telling you this is because at the end of the day, when we invest in this project, is the same as investing in a company. We need to understand how well they are run and how likely they are of being able to still offer their services to to their users in 1 year's time, 2 years' time, 5 years' time. Okay, so some fundamental analysis of crypto project is needed from that point of view, because, you know, apart from, you know, taking advantage of you know, price swings, the long-term future of the crypto projects does depend on good work being done in the background, and that is something that you cannot you know, you cannot you can say jump through. You need to get it done, and it leaves crumbs to be seen, kind of developers activity, etc., that they are there for everybody to see. Okay, so we can all find a way of realizing which projects are the ones where the real good work is going on, and which projects are instead the hyped projects supported. When you hear the word VC connected to any project, be very careful, because VCs are in the business of making money for themselves, not for you. Okay, so project can grow very quickly, but the rug, that's why we're talking about rug pull, can be pulled very quickly, because once they take away liquidity because they want the investment back plus a lot of money, then there's nothing left there for you to take out. Okay, may sound very exciting, you know, to begin with, but when things go wrong, look at Luna, look at Solana, etc. You know, Solana was $250 last year. Okay, remember now it's below $20. So do be careful about what you buy, what you invest in, and ask some pertinent questions. And I say you cannot do without doing some proper due diligence when you invest. And this is, well, we're talking about crypto today, this is a crypto hour, but it's the same thing if you are investing in any asset out there, whether it's, you know, stocks and shares, bonds, etc. You need to understand what you are buying and act accordingly. Okay, so after this whole bundle of good news, I can stop sharing. Let's see, do we have some questions from the room? We've got 10 minutes left. Let me see. Stan say, I thought Warren Buffett did not like crypto. Yes, he doesn't. And what we were talking about before, we're talking about a ETF of the XLF, which is an ETF of banking shares, banking stock in the US. So it's got nothing to do with crypto. But because of the problems with Silvergate and the Silicon Valley Bank are two banks, okay? And so that's a banking problem. It's not a crypto problem. It becomes a crypto problem simply because the customers of Silvergate are mainly in crypto, and they are basically running out of options of finding places that will take them as customers to do their normal day-to-day banking, because every project, whether it's crypto or not, they still have to pay their employees. They need to, you know, pay for the, for their property wherever their offices are, etc., for their computer equipment. So they do need a, a banking provider that will deal with them. And at the moment, all these options are just disappearing very fast. And that's a big problem. That is a big problem, because everybody needs a what's it called, a non-ramp and an off-ramp, and this is what the banking sector represented for crypto. Okay, because until we get to the point where we can use and spend our cryptos everywhere, we still have to rely on cash and currencies. So that's the problem. Jeff, do you see a bounce in the market at all, or is it likely to keep going down? Which market?
Well, it's crypto hour, so overall.
Well, overall, these are all. I mean, the latest, all the things they have brought crypto prices down are really not much to do with crypto. FTX wasn't a crypto problem. Silvergate Bank is not a crypto issue. Silicon Valley Bank is not a crypto issue. So in a way, for me, so from one point of view, you get a lot of the bad actors out. So crypto is cleaner now than it was 6 months ago. Okay, but from the other point of view, from people that are outside of crypto, they are losing confidence, and prices follow confidence. As you will see, during a bull market, you will see more people buying Bitcoin at $40,000-$50,000.
Yeah,
they are buying at these levels now at 20,000, because it's kind of like the herd mentality. Oh, look at that, everybody's earning, everybody's buying Bitcoin, I should buy some as well. So this traditional novice mistake, so buying something at the end of a rallying price, or selling something at the end of a drop in price. It's just like a normal mistake. And as an investor, you have to train your eye to buy when everybody else is fearful, and to sell when everybody else is excited.
Agreed. It seems like the broader economy has still got higher interest rates to come, and more bad news. So it's the S&P and this, but still got further to go, hasn't it?
And also you can follow very, very easily when you see. Let me show you the without going into more technical websites, but simply by going to the Forex Factory or investing.com or any of those, will generally show you the bond, the prices that bonds attract on the market. So you can see there are auctions every month. In this case, this one is for the 30-year bond, but there are some others for like a 4-year, 2 years, 8 years, and so on. And you can see the.
We can't see your screen, Luca.
Oh, sorry. I thought why is it paused? Okay, I stopped sharing and I'll do it again.
Okay, thanks. Yeah, the bonds are high, aren't they?
So if you can see this, these are the actual figures.
No, still can't see it, Luca.
Why not? I don't understand why not.
I know, it's your computer, not ours.
I'm gonna say, let me share the desktop so it should see everything. Okay, can you see the screen now?
Hedera.
Okay, so if we look on, this is forex.com. This is just the calendar. Okay, so there's nothing too difficult. You can see yesterday, for example, there was the 30-year bond auction. Okay, so this is last month was 3.69%. Now it's 3.88. Okay.
Yep.
So you can see here the numbers. It was so you see what the expectations of the markets are. So they're asking for more for lending their money to the government. So going 3.5%, 3.59, 3.69, and this is for a very long term, the 30-year bond. Where is it? This is the 10-year bond on Wednesday. Again, we're going. You see, what first of all, October, November. Then from November, this is why the market was excited, because the bond yields started going down. So doing business is cheaper. Everything is rosy. Okay, we've gone from 4% to 3.6%. Okay, now we started to inch forward again. We've gone from, I know there is something very little, but from 3.58% to 3.61%, but still it shows a change of direction for both the long-term and the short-term bonds. Okay, and you can find them in different different bond duration at different times. They auctioned at different times. Okay, but you can see the figures and the numbers going up, where the market was expecting for rates to peak at 4.9%. Now rates are expected to peak just below 6%. So obviously, it's not a good news from the point of view of the market, and because the doing business is more expensive, and so less profits for companies, less returns, etc., etc. So less people will not want to invest as much in stocks and shares. So it's just like a cascading effect, and this is why everybody is looking at two things. One of it is inflation, because until inflation is under control, the authorities are required to take action to bring inflation down to the target of 2.5%. And two, they're looking at the attitude of the central banks to future raising interest rates. And we had very, very hawkish speeches given by both the Monetary Policy Committee in the US, by the Bank of England, by the European Central Bank, talking about now they're going to be aggressive and raise probably by 50 basis points in the next 3 meetings. So each of them, yeah, each of them. So we are talking about very, very serious decisions that will have effects for millions of people, because these are decisions and then on which mortgages are based. So we go now to the mortgage rates in the US are touching 7%. Okay, so compared to a few months ago, it's a big difference to people's pockets. Okay, so as an effect, then a follow-on effect on the whole economy. Chad, you had a question?
Thank you.
Morning. Hello, everybody. Luca, some tremendous insight. Are you running this weekly?
Yes.
Yes. Can I jump in? Because this is fascinating. Thank you. My question to you, with every negative, there's an opposite positive, right? How do we flip what you're saying? And I see it all the time in deliberately pushing down bad propaganda. It suits some, right? And you're right. The goose doesn't want to give up the golden eggs. So how do we take this now and turn it into opportunity? So while interest rates are high, we could probably buy property cheap. While cryptos are being dissed, if you like, we could probably pick up cryptos cheap. How do we use this to our advantage now? And how would we be looking at sectors of our portfolio probably to take care of this? So the way I look at it, perhaps just to start the conversation, we've been fascinated with your trading studies. Thank you very much for sharing that. You put a massive amount of work into that, and we're benefiting from it, as with fungi, for example. And is it, while fiat is still the thing, to optimize that and take those returns into dollar cost averaging into what is potentially, you'll always be around, whatever the new currency would be. How are you managing your portfolio, looking at these negatives and opportunities, I guess?
Well, it's so the two separate things. I do take advantage of swings. Is like, for example, just having a look at fear and greed. Those are the main drivers of the market. So at the moment, we're seeing a lot of fear in the banking sector. So soon, keep an eye on that. And it's just like I'm not talking about difficult things. XLF is an ETF, everybody can buy. So it would be very cheap in the next few days. I say no financial advice, but just follow that and follow the components of it. because this, I would say, when there is bad news affect everybody, even people that are very structurally sound. So go through the list of the banking sector and see which are the best players in there, and they might be at a discount, a heavy discount. So that's the thing. As an investor, you want to buy when everybody else is fearful. If you look at what happened in 2020, in March 2020, when the pandemic hit, the asset prices of everything was so cheap. You could buy, Bitcoin went down to $5,000, but also, lots of stocks and shares went down to historic lows. So by keeping an eye on the markets, you can, you just realize when, because we all know we go to the supermarket every week, and we know when something is, the price of something that we buy every week, we all know when it's gone up or when it's gone down or when it's on offer. So that's easy for us to understand. The fact is that generally we don't know when financial products are cheap or expensive because we don't normally look at it every day. So the first thing I'll tell you is that whatever your experience is in life, whichever sector pay attention to that sector and the ways that you can invest in that sector and follow it. By following it, you realize the periods when, oh my God, now these shares of these companies that I know very well have gone down 20% with no particular reason, simply because, I'd say something that's happened, like a whole market event has affected everybody. It gives opportunities to buy. And the same way on the other side, when we're in like a euphoria phase, when everybody's buying everything, it gives us opportunity to sell. So just, the way I see it, just like generally speaking, to have nimble feet, so you can, get in and out of, just vary your portfolio quickly, depending on how, familiar you are with certain instruments. Options are something that you can use often to hedge your portfolio. That makes things a lot easier rather than having to, to buy and sell a large number of different shares. An option can hedge your position in bad times and take advantage also of, of your analysis if you think that things are going up. So that's an instrument that it's used a lot. It's used a lot for hedging. But generally speaking, I'm a proponent of a balanced portfolio. Although I talk about crypto all the time, crypto should be, and according to me, probably no more than 1/3 of your portfolio at the very maximum. The rest goes in traditional assets, and you probably know a lot more than me, Chad, in the traditional asset sectors. But obviously with your some very good products there with your structured notes. But generally speaking, a balanced asset that will include property, will include precious metal, includes stocks and shares, crypto, is not, there isn't a solution that will work for everybody and in every market condition. Is basically you need to have some assets that go in different directions sometimes. So if one goes up, another one comes down, so you keep a certain level. That's the only way to, I think, to protect yourself in the long run, and not have too many eggs in one basket.
So perhaps just to summarize, what I heard is perhaps trading is a great idea and keep buying value in stuff that is quality.
Yeah, definitely. And this is what Warren Buffett has done for so many years. He keeps buying things that he knows that will still be there in 20, 30 years time, whenever they are cheap. And then his analysis, he analyzes and finds out when something is cheap. And that's how he works. So
I'm grateful.
Yeah.
Thank you.
That's life. By the way, kind of like a quick note, Jonathan, are you live? Are you listening, or are you somewhere else? Finally, I've managed to buy some NTX like Cardano token, and if you want to know more about NTX and other Cardano tokens, obviously Jonathan is holding a Cardano session, a Cardano focus session at 9:30 on Discord. So as usual, please post the link in the chat box. And Jonathan just actually was telling everybody that one of the projects that we're looking at was NTX, which is part of the AGX family, so artificial intelligence, and they were doing a special promotion, doing some airdrops for people that held certain amount of their tokens. So trying to buy those tokens for a while at a decent price, and that's another thing. Okay, so their tokens were about 24, 25 Cardano cents. Okay, so ADA, so 0.24 ADA each, but I didn't want to pay that. Okay, so I put an order for 18 and I had to wait a couple of weeks for that order to be filled. Okay, but again, when you're in the markets, you can either buy at retail price, which is by whatever the market is asking today, or you can draw a line in the sand and say, look, I want to buy that, but I only want to buy at my price. Prices where there's like a wholesale level, and then you wait. And that's the thing, the way you need, as an investor, probably the best quality that you need is patience, because price takes time to move to kind of like extremes, and you have to wait for price to hit your level. And I wanted to ask Jonathan, is there anything I need to do to get the airdrop apart from having the tokens in my wallet?
No, if you got them in your wallet and you've got at least 150 ADA in there as well, then you qualify for the earn drop.
Fantastic.
So taking each 1 day, so yeah, you should be qualified. Excellent.
So we're all set. We're all set then.
Good work.
And so this is one thing, and I've got to go in a minute, but this is somewhere we got to be careful. The artificial intelligence tokens have had a boom recently since the Microsoft bought ChatGPT, and everybody's talking about ChatGPT. So everything that's connected with artificial intelligence have had a boom in price. So you have to be careful, even if you want to get involved, not to buy at the top of the market, because you're paying really overstretched prices. Okay, so that's one lesson for everybody to learn. If once you've done your analysis, your due diligence, and you find out what you want to buy, wait for price to get to your level. Okay, so we can close the call here unless there are any last minute questions. Yeah. Okay, then I will see you all next week. And by the way, I will encourage you all to join the Modern Day Investor, because I have decided I will soon be leaving Genius U as a partner. So I will not have this facility available of the Genius U circle. So I will talk to Mark and probably have this. I'll carry on with these sessions, but probably as a Facebook Live in in the Modern Day Investor Facebook page. Okay, so nothing really changes for you, just a place where I will post where I will post the link, and it won't be on Genius U, but it will be directly on Facebook. Okay, so thank you very much, everybody. Have a great weekend, and for those of you that come into the AIW event, I will see you later on tonight. Otherwise, I'll see you next week. Have a great one, everybody. Okay. Goodbye.
Thanks, Luca.
Bye-bye.